Yo, what's going on, everybody? In today's video, we're going to be talking about the equity indices. Um, this week, equity indices have and stocks and also Bitcoin has crashed. We're going to be talking about that, and we're going to be talking about Mexican peso once again. So let's start with the equity indices. Let's start with the Nasdaq, which I was talking about last week. All right, so the Nasdaq, let me delete all of this. So the Nasdaq last week was over here on this rally base rally. All right, I was telling you guys that I was looking for a break of structure in that zone. It never gave me the break of structure. So luckily, or maybe not luckily, I didn't enter the trade because I follow my game plan. So my game plan saved me from that loss. So now we're currently on a rally, then base rally. All right. So we entered that sub demand zone. All right. Let's go to the daily. The daily right now we are on this drop. I mean, we're not right now on it, but we touched this drop base rally. All right, so it literally touched and then it reacted. So let's go to the fundamental part. We're currently undervalued again against interest rates. Pardon me, against interest rates and the U.S. dollar. So that's beautiful. All I'm looking for is an inverted head and shoulders. All right, so I'm looking for a break of structure to create a lower low. Put this lower. All right, so I'm just waiting for a lower low and then to create to break the previous lower high and then give us a pullback, creating that right shoulder, and then we enter the trade. All right. So that's currently what I'm waiting for right now. And or maybe I might wait for a bullish engulfing on the daily chart, whichever looks prettier, to be honest. I think the 4 hour inverted hand and shoulder would be more ideal because of the risk to reward. If it gives me a bullish engulfing right here, the stops would have to be over here. So I don't have a lot of room for risk to reward. So that's why I prefer the 4 hour break of structure and then pull back and bullish engulfing, and then we're in the trade. So that's the Nasdaq, and honestly, the S&P and Dow and the Dow Jones is basically the same. We have a drop, base, rally. Price came into that zone. We can see on the daily we're currently undervalued against both of them. So it's the same story. Whichever out of the three, out of the US third, out of the Dow Jones, S&P, and Nasdaq, out of the three, the best that looks better or looks best, then I'll be taking that trade, you know? So the same thing, we have a drop and then a base. Price came into that zone. On the daily, we have this is kind of choppy, to be honest. This daily demand zone, I don't love it. But yeah, on the daily, we have currently undervalued again against interest rates. Um, I'm favoring more the other ones because the other ones are already undervalued against the dollar also. So we'll see. We'll see. So let's talk about Mexican peso lastly. All right, so let's go to a futures chart. So here we have a drop, a base. I mean, we actually have a rally base, then we have a rally. Or we can actually make this the demand zone, um, which is all of this, which it could be a lot, maybe from here to here, or maybe we could do it from here to here. So the thing is that the the demand zone is around here. All right, the demand zone is around here. It doesn't have to be perfect. All right, so let's go to the daily. And on the daily chart, we also have this beautiful demand zone, which is a drop. This gap, I consider it like a decisive candle. All right. And then we have indecisive, 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 and then explosive candles. I mean, decisive candles to the upside. So all of this would be the demand zone. So we're a level on top of level. All right. We have a weekly level and we also have a daily level, which it pierced a little bit, but look at the retracement that it's already having. So it's respecting the zone. All right. So let's go. Let's discuss the fundamentals now. The fundamentals. We have the fund managers creating a divergence. All right. So so the fund managers are trend followers. All right. So we are seeing right now that uh, the the fund managers are continue to buy are continue to buy this market. All right, and on the chart the price is representing or reflecting the opposite thing. All right, we're making lower lows and then we already here doing the opposite. All right, so that's a huge thing that I like about this market. And the most important thing is the retail traders, and look how bearish, all right, how bearish they are. So this is looking amazing. Also, if we take a look at the campus valuation tool, we're currently undervalued on the weekly against interest rates, and I think on the daily we're undervalued against the dollar, and or we're yeah, we're currently almost undervalued. We're undervalued against interest rates and the dollar. It's uh it's almost undervalued also. So this is huge. This is almost three confluences telling us that price should continue, should bounce from there. All right, so let's take a look at the USD Mexican peso, which is what we're going to be trading. USD Mexican peso came into this base drop zone on the monthly time frame, and look at this. So it came onto, it pierced a little bit, and now look at the retracement it's having. All right. On the weekly, we have this rally and then base drop. It kind of pierced a little bit, and look at the reaction that it's giving us. So this is looking pretty good. And then over here, as guys can see, we're overvalued against the dollar. So that's amazing also. All right. So we have a lot of confluences telling us that price should go down soon. All right. So what are we waiting for? We're waiting for uh, a head and shoulders, a higher high, a break of the previous structure, pull back, and then we're gone to the downside. So that's pretty much it. If you guys have any questions, just shoot me a DM um or simply leave it at the comment sections. Have a nice one, guys. Cheers.